Good afternoon and welcome to the end of week market review for Friday, February 22nd, 2013. As you can see, we've got a few things to cover off. We're going to be starting with taking a look at the market news. We're then going to take a look at some economic reports. Once we're done that, we're going to look at both the S&P 500 as well as the Toronto Stock Exchange. When we're looking at these, we're going to be looking at charts for the daily and the weekly charts on both short-term and long-term scales. We'll then go ahead and take a look at the volatility index and wrap things up by taking a look at one of our great picks. As you can see, the markets did end up the week with some slight gains on the day, but the S&P 500 is down for its first time in 8 weeks. All in all, the Dow Jones is up 0.13% from last week's close, with the S&P 500 down 0.28% from last week's close. If you look here, you can see that oil is also down. We're down 2.55% from last week's close. This is putting it at $93.37 per barrel. We've got silver down 3.56%. This puts it to $28.69 per ounce. Gold is down 1.79% from last week. This puts it to $1,580.20 per ounce. And finally, the US Canadian pair is up 1.59%. This puts it at 1.0222 pips. So all in all, we definitely had some declines from last week with some increases with the Canadian dollar versus the US dollar. If you look at the economic reports, you're going to see that we had a few things which affected the markets, mostly negative. However, you can see that the jobless reports did come in better than expected. So we did have some good stuff come from that, but we are seeing some negativity coming out of the Federal Reserve. Over the next week, we're going to be seeing what ends up solidifying with that and whether or not the declines that we've seen are going to continue from the news or if things will shapen up and fix themselves out. While looking at the S&P 500 on the daily chart, we're going to notice a few things. First off, it looks like it stopped its decline and has found support at 1500. Now this was after breaking down below a trend line that was put in place in the middle of December. If things end up shaping up, we could end up seeing it rising and finding resistance somewhere around 1525. If things continue to worsen, we might end up seeing declines down to around 1475, which was the previous cycle high, way back in the middle of September. The MACD is declining bullish and with the black line down below the blue line. If you look at the S&P 500 on a weekly chart, you're going to see the breakout that we had last week and how things have flattened out and even closed a little bit lower this week. All in all, we've had a great trading run, but we are going to expect things to pull back now. This is further emphasized when you take a look at the S&P 500 over the last 5 years. This tiny little speck over here is where we're at, and you can see that it's well above the average 5-year high. We really haven't seen these types of gains for quite a while, so it only makes sense for the markets to pull back so that they can regroup and work themselves up again. While looking at the TSX, you're going to see a few things here. You're going to see that it's pulled itself back into the trading range that it broke down below on Thursday. It's very possible that we'll continue to see declines and even work itself down to support around 12,500. But we can see that the MACD is declining bearish and with the black line down below the blue line. While looking at the TSX on the weekly chart, you can see that the gains that we've had have been pretty good over the last few weeks. However, this pullback is putting it back within its average trading range. Not too bad, considering we've now pushed ourselves into bearish territory. When you look at the TSX on the longer scale here, you're going to see that the overall gains have been good over the last month or two, but we're nowhere near where the S&P 500 is on their 5-year chart. Where the S&P 500 is at 5-year highs, we can see that the TSX has many levels of resistance that it still needs to overcome. The first hump coming from the beginning of 2011, and then finally way back here in March and April of 2008. You can see that the volatility indicator is definitely working itself up again. Although it went up just above 16 yesterday, it's down to 14.17 today. Even with the decline, it is at 13.72% higher than what it was last week. Because we can see this increase in volatility, we need to be aware of the markets possibly going through a correction, and we need to make sure that we're trading accordingly. Obviously, though, the S&P 500 can trade quite happily between 14 and 16 without any real concern. The issue, though, is that we've had such a large increase happen so quickly. Alright, one of the picks that we had show up on February 18th from our basic watch list was KBALB. Now, while it was on the watch list, you're going to see that the MACD was bearish, but we ended up seeing an incredibly good result in volume. We can see that all of our other indicators were rising, and we had some great room to the 22 EMA. Within 3 days, this stock managed to earn 2.96%. This was despite the 2 days of negative trading that we had. If you look on the hourly chart, you're going to see that the entry price would have been between the 5 EMA and the closing price. This was decided based on our My Wealth Accelerator disciplines, which means that we would have put our bid in for $9.47. If you have any further questions, please let us know by either contacting us at the email address which you see on the screen or the phone number. And finally, we would always encourage our traders to continue to trade by the books and never deviate away from their disciplines. Ultimately, though, any trading decisions that you make are your own, so make sure that you're always trading with caution. This has been the end of week market review for Friday, February 22nd, 2013. Ciao for now.